If you own a rental property or run a side hustle, this one's for you. The ATO reviewed rental tax returns and found errors in 9 out of 10 of them. Blackwattle Tax 2025, nearly every single return had a mistake. And in the 2025 to 26 year, your return is being cross-checked against more data than ever before. The villain here isn't a person, it's an automated system that already knows your numbers before you lodge. Millions of Australians lodge returns the ATO can now contradict in seconds, and the cost lands as back tax, penalties, and interest. Today, we'll do 3 things to keep you off the audit radar. We'll reconcile your income against what the ATO already knows, benchmark your deductions before you claim, and audit-proof your rental and side business numbers. 3 moves, all free. Here's the number that should make you sit up. The ATO is using about $1.1 billion in funding for data matching and compliance technology in the 2026 financial year. Blackwattle Tax 2025. That money automatically cross-checks your bank interest, employer reports, property data, even lifestyle signals against your lodged return. But here's the part nobody tells you. It doesn't need a human to flag you. The mismatch does it automatically. 3 moves. Reconcile your income against ATO pre-fill. Benchmark your deductions and audit-proof your rental and side hustle. Each takes under 20 minutes and all of them are free. Red flag number 1 is income that doesn't match what the ATO already knows. The ATO automatically matches your bank interest, dividends, employer PAYG reports through single-touch payroll and platform income against what you report. Blackwattle Tax 2025. Any mismatch raises an automated flag, and it's not just big numbers. Even a relatively small omission like $2,000 of interest income can trigger a discrepancy notice within weeks of lodgement. Brown Hamilton 2026. Gig work, rideshare, online sales. That's all reported now too. Here's how quietly it costs you. Say you enter $200 of interest from memory, but your bank reported $620. Brown Hamilton 2026. That gap is automatic. Now scale it up. If the ATO corrects an underreported $5,000 side hustle for someone on a 32.5% marginal rate, that's $1,625 in extra tax, a 25% failure to take reasonable care penalty, adding about $400 plus interest, ATO guidance, which modelled. Over 2 years, that one omission pushes past $2,100. Red flag number 2 is deductions that don't fit your income, your industry, or the ATO's benchmarks. The ATO compares your work-related deductions to others in the same occupation and income bracket. Claims that exceed the benchmark attract scrutiny. Yahoo Finance 2026. Big jumps in vehicle, home office, or self-education claims are classic flags, and so are rounded numbers with no documentation. But the real minefield is rental property. Interest apportioned wrong after a redraw. Capital improvements claimed as repairs. Private use claimed as deductible. Think about the difference between the optimistic claim and the defensible one. The optimistic approach, round numbers, everyone at work, claims $3,000, rental treated as set and forget, is exactly what gets flagged in 9 out of 10 rental returns. Blackwattle Tax 2025. Picture a landlord who deducts $10,000 of interest and repairs that should be partly capital or private. At a 37% rate, that's $3,700 in back tax, plus penalties of $900 to $1,800, ATO guidance modelled. Over a 5-year review, repeating that can exceed $20,000. Here's the myth that gets people caught. A couple of $1,000s is too small to notice. People assume the ATO only chases big fish. But the fact is, the ATO's systems are specifically tuned to catch small mismatches. Pre-fill auto matches every dollar of interest, dividends, and platform income. Brown Hamilton 2026. One $5,000 omission can cost over $2,100. Reconcile every line first. Let's put both costs side by side. One $5,000 income omission can cost over $2,100 once tax, penalty, and interest land. ATO guidance modelled. And rental errors repeated over a 5-year review window can reach $20,000 modelled on ATO penalty ranges. keep the same habits for a decade, and the combined lifetime cost can climb to $60,000 to $80,000, authors estimate. Meet Sarah. She's 38, a full-time marketing manager in Sydney on a $105,000 salary. She runs an $18,000 sole trader consulting business on the side, and she owns one rental apartment worth $480,000 on an interest-only loan. She's got about 29 years to retirement, and she lodges an individual return with work deductions, a sole trader schedule, and a rental schedule. Here's what Sarah found. Discovery 1. Sarah downloads her ATO pre-fill and sees her bank reported $620 of interest, but she'd only entered $200 from memory. On top of that, she earned $3,500 on a gig platform that now feeds straight to the ATO's data matching systems, Blackwattle Tax 2025. That's $3,920 of underreported income. At her 34.5% rate, plus a 25% penalty and interest, one small oversight could cost her around $1,750. Discovery 2. A different layer. Sarah claimed $4,200 in work-related deductions, home office, car, self-education, tools. But ATO occupation benchmarks for salaried marketing roles cluster closer to $1,500 to $2,000. Yahoo Finance 2026. If the ATO disallowed $2,000 of that as private or poorly documented, she'd face $690 in extra tax, a $173 penalty plus interest, about $900 on one optimistic year. Discovery 3 is the big one. Sarah claimed $19,000 of rental interest in full, but she'd used $30,000 of a redraw to renovate her own home, not the rental. Blackwattle Tax 2025. She also claimed $4,000 in repairs that are actually capital improvements. Across a 4-year review, the overclaimed deductions total $32,000. At 37%, that's $11,840 in back tax, a penalty of nearly $3,000, and interest pushing the total above $15,000. Add Sarah's habits up over a decade and the picture is sobering. Underreporting around $3,000 of scattered income each year and overclaiming about $3,000 in deductions at her 34.5% rate, with penalties and interest. That builds to a realistic band of $60,000 to $80,000 in extra lifetime tax, authors estimate. Money she thought she'd saved. So could this be you? Sign 1. You've never opened your ATO pre-fill report before lodging. Sign 2. You don't know how your deductions compare to others in your occupation. Sign 3. You haven't checked your rental interest apportionment after a redraw or refinance. If any of those apply, the next 3 moves are exactly for you. 3 moves, let's do them. Move 1. Reconcile every dollar of income against ATO pre-fill. Before you lodge, go to MyGov, link the ATO, and open your 2025-26 pre-fill report. Line by line, confirm every interest, dividend, employer payment, government benefit, and platform income figure. Only lodge once your return matches, and any income you know about that isn't there, like cash work or crypto, gets added on top, never left out. This is general information, not personal advice. Here's how. Log into MyGov and link the ATO if you haven't already. Open your 2025-26 pre-fill report and export it. Then match every income line and add any extra income you know about on top. What good looks like? 0 unexplained differences between your return and the pre-fill. Move 2. Benchmark your deductions before you claim. Look up the ATO occupation guide for your job, like marketing professional work-related expenses, and check the typical categories and substantiation rules. Then strip out any claim that uses rounded figures without records or that's well above the ATO's examples in your past years, unless you've got a documented reason like a one-off course. Here's how. Find the ATO occupation guide for your job online. Check the allowable categories and the substantiation rules, then cut any rounded or undocumented claims. What good looks like? Every claim has a receipt and fits your role and income. Move 3. Audit-proof your rental and side business numbers. Use the ATO Rental Property Toolkit to check your interest apportionment after any redraw, separate genuine repairs from capital works, and account for private use periods. For your side business, compare your profit margin to the ATO's small business benchmarks and make sure your BAS turnover reconciles to your income tax return. Here's how. Check your interest apportionment after any redraw or refinance. Split repairs from capital works correctly. And reconcile your BAS turnover to your income tax return. What good looks like? Your rental schedule matches the ATO's treatment exactly. Why now? Look at the timeline. Back in 2017, travel deductions to inspect rentals were banned from the 1st of July, yet those errors still show up. In 2024, the ATO's review blitz found errors in 9 out of 10 rental returns it checked. Blackwattle Tax 2025. And in 2026, that $1.1 billion data matching war chest ramps up, cross-checking income, property, and even lifestyle signals. Brown Hamilton 2026. The window to quietly optimize is closing. Get it right before you lodge. After you act, here's how to verify it worked. You should see your return match every line of your pre-fill report. Confirm that each deduction has a receipt or logbook sitting behind it, and if you used a redraw, then your rental interest is properly apportioned. Questions? Ask a registered tax agent. Everything today comes from the ATO, Blackwattle Tax, Yahoo Finance Australia, Brown Hamilton, and LawPath. All the links are below. So now you know the 3 ATO red flags and how to reconcile, benchmark, and audit-proof your return. Next week, the work-from-home deduction trap quietly costing Aussies thousands. If this saved you from a nasty notice, subscribe. We read the fine print so you don't have to.